So we are discussing about the inventory cost. This is inventory. And there are two types of costs which you see like in case of inventory. Okay. One is the ordering costs and one is the holding cost or carrying cost. Okay. Now, when coming to examples of these costs, we can see certain examples. We will start with the ordering cost. Okay. So first I'll write the definition of ordering cost and then examples. Ordering cost. Ordering costs are considered expenses related to placing orders for new inventory. Okay. So some of the examples of this ordering cost would be, so like generally nothing but at the time of placing an order, these kind of cost you will be generally seeing. Okay. So now coming to the examples of ordering costs. So ordering costs are the expenses related to placing order for new inventory. Okay. And these are very essential in determining the EOQ. Okay. The economic order quantity. Okay. Now examples. Cost to prepare purchase requisition. I'm giving all the details. Cost to prepare a purchase requisition. Cost to prepare purchase order. See, requisition goes from one department to purchase department, then purchase department places an order. Then there will be some labor who are required to inspect the goods when they are received. Cost of the labor required to inspect goods when they are received. Okay. And then, like once the like goods have come to the premise or the godown, cost to put away goods once they have been received. That means you have to arrange. So cost of arranging. Then cost to process the supplier invoice related to order. Cost to prepare and issue a payment to supplier. So these are all the costs. So in general, some more cost I can write here. Generally, not only these costs, transportation, shipping fees, inspection I have already written here. Okay. So these are the costs which you will be incurring in case of ordering cost. Okay. Now coming to holding cost. Anything we have missed here, like transportation, then shipping, then you can say transit insurance cost, transit insurance. This is also one of the ordering cost, because when the goods are coming to us, okay, through a delivery van or some lorry or whatever, so we will take an insurance also. And then like accounting costs also. Okay, these are all ordering costs. Fine. These are all ordering costs which I have mentioned here. Then we can discuss about the holding cost. So I'll just put a line here, holding cost, also called as carrying cost. Okay. So holding cost, which is also known as carrying cost, are nothing but A, the storage cost, which you can see like in warehouse or go down. Go down rent or whatever, you can keep that in mind. Then insurance. See, this is transit insurance. This is different from the general insurance what you take for the goods which are in your go down. Okay. See, your particular goods can also get spoiled, spoilage costs. Okay. So these are nothing but the holding or carrying cost. Fine. Now, what happens is you have to understand some important points here. Okay. So I'll write some points here. See, these basics, if you are okay with, then never in inventory, never in case of inventory topic, you'll be having issues. See, ordering cost and carrying cost are in opposite nature actually. Okay. So ordering cost and carrying costs are opposite in nature. See what happens if you whatever the carrying cost you are incurring, if you want to minimize the carrying cost or holding cost, you should place small orders. Okay. 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 So I'm writing a point to minimize the carrying cost a company must place small orders. So what will happen is, to minimize the carrying cost, you are placing small orders, but the number of orders you will be placing will be more, correct? Okay. If the order size is small, okay, more orders have to be placed. Am I right or wrong? See, what are you doing is you have a go down. So since the go down, what you have is a small one, you are placing small orders. Okay. So the number of orders are like more. So, orders, if order size is small, more orders have to be placed. So with more orders you place, the ordering cost increases. Okay. But your carrying cost is not increasing. Why the carrying cost is not increasing? Because these orders you can easily hold in your go down. You need not take extra space for these orders. Understood? Hello?
Yes, sir.
Hello? Are you
Hello. Yes,
understanding?
sir.
Yeah. So if the order size is small, more orders have to be placed, which increases the total ordering costs. Now, this is the point number one. Point number two, if the company wants to cut the ordering cost, see what company is doing is, when they want to minimize the carrying cost, they want to place small orders. If they place the small orders or the order size is small, more orders have to be placed. That increases their ordering cost. I understand the carrying cost is less, but the ordering cost is more. But if the company wants to cut the ordering cost, let's say, I'm showing how they're opposite in nature. If a company wants to cut its ordering cost, so it should place less orders. But what they can do is they can place orders of bigger size. Are you understanding? See, they want, see, if I place 20 orders, okay, and if I place 5 orders, here if I place 20 orders, my order size is very small. Okay, my order size is very small. And you have already seen what are your ordering cost here. Already we have written we have seen the examples of ordering cost. Am I right? Written here. Yeah. So transportation, shipping fees, transit insurance, accounting cost, all those comes under the ordering cost. Okay. So, you know, if you place 20 orders, every time you have to pay transportation charges for those orders. Am I right? So with small order size and more number of orders, more transportation charges you have to pay. Why? Because if you're placing if you're placing the orders 20 times, that let's say every 2 days you place 2 orders, then like 3 orders, and then 2 orders, then you place 3 orders. This will make 20 orders, and every time, this time also the delivery van has to come, you have to pay delivery charges, again you have to pay delivery charges, again you have to pay, again you have to pay. So your ordering cost is increasing. Every time you are paying order, you are paying the delivery charges. That means the transportation cost. Since your order size is small, more orders you need to place, more orders, more transportation cost, the ordering cost is increasing. But if you place 5 orders, since the order are less, the order size have to be more. Because see, you should, what matters for your business is you should have sufficient inventory to sell to customers. So here what happens, once you place bigger orders, that means you are asking them to bring 10 units in one order, okay, like that. Here you are making 20 orders and the number of units you want is 100. Okay, so orders are coming many times. Just a second. You are placing 20 orders, okay, and accordingly every order they are delivering 2 units, 3 units, 2 units, 3 units, 5 units, sometimes like that. You want 100 units. The demand is same here. Here also you want 100 units. But what is happening is here you are placing 5 orders, you are placing 10 orders and getting your 100 units in lot of 10. So what is happening here? The number of orders is less, so the ordering cost will decrease. Here the number of orders is, because here only 10 times the delivery van will deliver. Here the delivery van will deliver 20 times. So 20 times you have to pay transportation charges, 20 times you have to account, 20 times you have to do the inspection, all those things. Here you have to do just 10 times. Hence the ordering cost is less here because the order size is more. Number of orders is less. Number of orders is less, but the order size is more. Now order size is small. Okay, order size is big, we can say big or large. Order size is small, number of orders is more. So ordering cost will be high, ordering cost will be less here. When ordering cost is high, okay, the carrying cost will be less. Carrying cost will be less. Why the carrying cost will be less? Because all these small orders can easily be accommodated in the go down. You need not take extra go down or extra space or extra you need not take, you need not ask anyone else to like keep your goods, because you have enough space to accommodate these small orders. So henceforth, since you're not taking some extra premise, extra space, extra go down for holding all these small orders, you're not paying any extra rental or any extra charges or cost. Henceforth, your carrying cost will be less. But here, since the order size is more, a bigger order size may make you to take like extra space to hold these big or large size orders. Okay, so since you have to take extra space, or you want to take you have to like take some other premise on lease, or you have to ask someone else to hold your goods. Okay, because you're getting bigger orders and you don't have the enough space to accommodate that one, so you need to take extra space, pay extra rental, extra charges you are bearing. So here the carrying cost will be more. Okay, so did you understand now? Hello, who did you understand?
Yes, sir.
Yeah, so the final conclusion is, if the order size is small,
Hello.
that, hello, yes, yes, who, hello, yeah, can you hear me? Hello, yeah, if the order size is small, of course number of orders you have to place is more. Okay, but since the order size is small, what is happening is you are placing more number of orders, that is increasing your ordering cost. And since the orders are small size, you can easily accommodate or keep it in your go down, and hence the you need not take extra space, so your carrying cost will be less. Okay, this will be more, this will be less. Now, since the order size is big, that means you have to you are placing less orders, but the orders what you are placing is of bigger size, large size orders. Okay, so order size is big, of course your ordering cost like decreases. Okay, I'll just keep an arrow mark here, decreases. Since the order size is big, more quantity of goods are coming to your godown, hence you have to take extra space, so carrying cost will be high. Okay, so this is what is the explanation. So in this case the ordering cost will be more, carrying cost will be less. In this case the ordering cost will be more and carrying cost will be, sorry, ordering cost will be less and the carrying cost will be more. So I'll just keep a division here. Okay, okay, let's go ahead. Now we have to just discuss about the formulas and do the questions. So yesterday I was giving you an explanation regarding the EOQ, na? So we will just discuss that particular graph. I'm just taking that. This was the graph yesterday we were discussing. So yesterday we discussed that holding cost plus carrying cost is equal to total cost of inventory. What happens as you place more and more number of orders, okay, your ordering cost will increase. That means the small orders, number of orders, that means order size if it is small, okay. Let's say here, so these are the order quantities, okay, these are the order quantities. Just a second. As I said you, if you are placing more orders, your ordering cost will be, what your ordering cost will be? It will be less. If you are placing less orders, that means small order size. That means if you are placing orders of small size, that means let's say here the order quantity units. If I take up this 100 order quantity units, like 1000, here it is 1000. This 1000, what is this 1000 about? These are the order quantity. That means in number of units. Okay. This is a small size or a big size order. I already told you, if your order size is small, that means you are placing more number of orders. Your ordering cost will be more. Am I right? Yes. And if your ordering size and your carrying cost will be, if your order size is small, if you are placing more number of orders, your carrying cost will be less, your ordering cost will be more. But if your order size is big, okay, your ordering cost will be less because you are placing bigger size orders, less number of orders, less transportation cost, less ordering cost, but your carrying cost will be more. Why? Because you have to, you should have more space now to store them. So now see, as the number of ordering quantities are increasing, the holding cost is increasing. Why the holding cost is increasing? Because the orders are going bigger and bigger and bigger and bigger. As the orders are going bigger and bigger, the ordering cost is decreasing or increasing? Hello? Hello? It's decreasing, na? Hello?
Yes, sir.
Yeah.
It's decreasing, sir. Hello.
Yeah. As the order size is going bigger. So here the order size is going bigger. Here it is the biggest order size. The ordering cost is decreasing. And as the order size is going bigger, the carrying cost is increasing because you have to store more units, and for that you have to take extra go down or extra capacity, and that increases your holding cost. Now, if the order size is small, let's say the order size is 100 here. The ordering cost is what? Increasing. It is the highest. You can check it here. Okay. And the holding cost is decreasing. The holding cost is how much? Just almost nil. But if let's say the order size has increased from 100 to 200, the ordering cost has decreased to 7,000. You can check it here. And the holding cost has increased to 200. Okay. So sorry, the holding cost has increased to 1,000. Here. This is the amount here. Okay. So this is the number of units. So as the number of units are increasing, the holding cost is increasing, ordering cost is decreasing. As the number of units are decreasing, the holding cost will decrease and the ordering cost will increase. Okay, that's what. And now what we were discussing yesterday, what we wanted to discuss was about EOQ. This is such a quantity where your holding cost, your ordering cost, that means the combination of these two, which is total cost, will be the least. And I could see that is happening in the case of 500 units. So this 500 units, you can see, this is the ordering cost. I can understand ordering cost is least here, but our aim is to minimize the total cost. The total cost should be the least. So the total cost is least here. What is the cost you are incurring for 500 units? Almost 3,000 something. Okay. Okay, and total cost is a combination of ordering cost and holding cost. So what we see here, the holding cost and ordering cost are meeting at this point. Holding cost is equal to ordering cost at the rate of 500 units. So the number of units at which your holding cost and ordering cost are same is nothing but EOQ. Okay, and your total cost is the minimum, the least. Total cost is the least. Is nothing but the economic order quantity. That means that is the quantity at which you will be incurring the least cost. So that quantity is the one which every company or every business desires to hold. Okay, that's what. Discussion done. We have discussed all the important relevant points. Now let's go with the formulas and do some questions. So yesterday we were discussing the formulas. Today we will again do the discussion. Purchase cost. So purchase price into annual demand. So your purchase price is, let's say, $10 at which you want to buy some particular good and the demand is 100 units. So it becomes $1,000. Next, ordering cost. So cost per order. Okay. So like if at all $10 is the cost per order and number of orders you're placing is 50. So $500. And number of orders I have already explained you. Annual demand, let's say your demand is of 1,000 units. Order quantity per order, let's say in one order you place, whatever one order you place, you want 100 units. Okay, that means your order size is of 100 units. So 10 orders you have to place. What you have to do? 10 orders. Okay, so number of orders is nothing but annual demand by the quantity or the number of units you are placing in one particular order. Now, so 10 orders, I have explained about that. Then comes the holding cost, which is nothing but the cost of holding 1 unit for 1 year. This is per unit wise into the average quantity plus the minimum inventory. Okay, which you hold, because here also you are incurring the holding cost, here you are incurring on average inventory and per unit cost. Okay, so I can give it in such a way, cost of holding 1 unit for 1 year is, let's say, $10. Okay, and the average inventory what you hold is 1,000 units, and minimum inventory what you always want to hold is let's say 100 units. So these two combined together into this will give you the total holding cost. Okay, now this is the formula for economic order quantity. The formula is EOQ under root 2 COD by CH, whereby D is the annual demand, which will be given to you in the question. CO is the ordering cost and CH is the holding cost. Okay, please make a note of this, then I'll explain you this total inventory cost. We'll go for a question.
So,
Yeah. Uh, just a second. Now, total inventory cost is nothing but it's a combination of the purchase price, okay, into the annual demand in units. This is the purchase cost, okay, and then comes the ordering cost, that is the cost, the fixed cost per order, which is CO. So I'll just put everything here. Purchase price is $10, annual demand is 100 units, okay. This is my purchase cost, and fixed cost per order is, let's say, $10, and like my annual demand is like 100 units, and the quantity like number of units what I order is 10. So I'll place 10 orders, okay, 10 orders, okay. This is my ordering cost, and then comes my holding cost. So cost of holding 1 unit for 1 year, that is, let's say, $10 into the like number of units ordered, let's say that is 10, okay, because I took 10 here. Average, I'll take average of that divided by 2, okay. So I don't know why these guys have given this minimum inventory here. The formula is like only considering this thing. Let's see what what they're doing in the coming page. So this is what gives me the total cost of the inventory, okay. So combination of these three, and then you have this EOQ, fine. Now, can you do this question? Hoor, I'm giving you the chance. Find out the EOQ in this, please. Yeah.
Okay.
Find out the EOQ in this case.
Hi, sir.
Hoor, have you finished?
Yes, sir. It's 500 units.
Yeah, great. So we can do that. It is under root 2 COD. So 2 is always there into the cost of placing an order, ordering cost,
Sorry.
into the annual demand, which is 25,000, whole divided by holding cost 6.40. So when we calculate, we get 500 units. This is your economic order.
Yeah.
So let's say, see, this EOQ model is based upon certain assumptions. So EOQ model, we already discussed that the 500 units is that particular units or that particular quantity at which the total inventory cost is the least. Okay, but the thing is the demand is constant in the business. That means you should always have constant demand. If you don't have demand, uh, like in the sense, if the people don't show demand for your products, do you think you will maintain your inventory at EOQ? Do you think? No, it doesn't make sense because people are not coming for buying those units, na? let's say I always want to maintain 500 units as my economic order quantity, but the demand is very less that barely in 10 days I'm selling 1 unit. Do you think I should maintain this much? No. Unnecessarily I'll be incurring a lot of cost, no? So it is better if some particular product is not having demand, I should maintain less of that. So, but if the demand is constant, then it's okay. If the demand is constant, then this is all right. Delivery is instantaneous or lead time is constant. That means the time at which you want to place a fresh order. So that always you do in 1 month, let's say. If it is constant, then EOQ model holds good. Purchase cost are constant. That means you're not getting any discounts. What happens if sometimes the supplier gives you discount? In that case, maybe if you don't maintain your inventory at EOQ, then also you may get a better deal. That means your cost may be less. So don't worry, we will discuss a question in which we will see if we are getting discounts, then what? Then is EOQ a better is it better to maintain the inventory at EOQ, or is it better to maintain the inventory at some levels whereby we can get good amount of discounts and our cost will be less? So we'll see that with the help of an example. Okay. Now, the example is here. Let's see. So what about the next question? So this activity I am giving as homework to you. Will you do this or shall we do this right now?
I'll try it, sir. I'll try it
Okay.
myself.
Yeah, that's basic EOQ. Let's see the bulk discounts. See, what do you mean by bulk discounts? If you order the number of units in bulk, that means instead of you buying small if instead of you giving small orders to your supplier, whereby in one order size you only order very less number of units, then they won't give you that discounts because they even want to sell more and they want to enhance their revenue. For enhancing their revenues, what they do is they give you discount offers. So the discount offers are only available if you take more number of units or if your order size is very big. Okay. So now see this particular concept. Discounts may be available if order quantity is above a certain size. This needs to be considered when determining the best order quantity. The EOQ will give us the optimal order quantity to minimize the holding, ordering and purchase cost, but it does not take into account any bulk discounts available. That's what, because the assumptions are very clear. We already saw the assumptions. They won't consider discounts. Okay. Now we will see whether if discounts are given to us, it is better to maintain the inventory at EOQ, or it is better to take those discounts and maintain the inventory at those levels. Okay. So how to do such kind of questions? The steps are given. So whenever a question is given to you, in that they tell you that you are getting some discounts if you are buying the inventory beyond a certain order size or certain limit. Let's say let's say you have a business and you usually buy 30 units always. So what your supplier has said is if you buy 60 units from us, we will give you some percentage discount. Okay. And if they say that if you buy 90 units from us, that is 3 times of your order size, what you always give. This is twice the order size what you always or usually give. So they want to give you higher discounts. So now we will see whether it is better to maintain our inventory at EOQ in such cases, or whether we have to take those discounts and see whether the cost what we are incurring would be less, okay, or we will be beneficiary or not. Fine. Now, so we therefore need to calculate the total cost at each discount level to find out the lowest total cost. So what we will do is first we will calculate the economic order quantity, okay, as usually. And then what we'll